Your shopping center can't just accept anyone. Identifying the risks and mitigating them up front, really important. I've told the bank what the risk is there. They knew up front. I need to believe they can do it as well.
Talk through that element of articulating the value to the bank, why they should lend it, but what you needed to do behind the scenes so that the client can appreciate some of the work that gets done.
Recently, I also helped some clients purchase a restaurant that is part of a franchise in a shopping center. And it's really important to point that out, that it was in a shopping center. And the reason why that is, shopping centers will only accept a tenant where they believe that they're going to be able to deliver and run the business, because shopping center can't just accept anyone, nor can the franchisor either. So franchisor will do checks as well. These two gentlemen had worked in the hospitality industry for quite some time. What was involved in that was quite a thorough review of the franchise agreement itself. So actually reading that and pulling it apart and pointing out positives in it, but also the risks. And I was actually mainly looking for the risks, identifying the risks and mitigating them up front, really important. And also the lease agreement. So reading that lease agreement in its entirety, talking about the positives, that's important, but again, finding the risks. An example of that is the franchise agreement, the term of it didn't align to the lease term itself. The risk there is for the bank, one is ending sooner than the other. And the bank wants those to line up because the bank is giving a term based on which one ends first, basically. Because this was unsecured debt, they were giving a term aligned to the lease or aligned to the franchise agreement, whichever one ends first. The franchise agreement was ending in 3 years. The lease ended in 5 years. Now, obviously for our client, I wanted the best term possible, which is a 5-year term. There's an issue there. There's a 2-year difference. So I pointed this issue out not only to the bank, but to the clients. And I said to them, we should talk to the franchisor and see if it's possible to get this aligned to the lease term. And ultimately, that's what happened. The franchisor made an amendment to the franchise agreement and made sure that it aligned to the lease terms. I've told the bank what the risk is there. They knew up front, so they didn't have to go digging and diving for it. Get on top of it early, pointed it out to the client so he can talk to the franchisor to get that fixed. And ultimately, the client gets a better term on the loan to be able to pay back that loan with an additional 2 years. So instead of a 3-year term, client's got 5. That's just an example of some of the things I do in an acquisition. Also talk about the client's background, and what helps me with that is resume, CVs, talk about their background, what they've done, why I believe they can run this business, why they believe they can run this business. It's important I believe they can run the business too. Obviously they believe they can do it because they're coming to me to say, hey, can you help me? But I need to believe they can do it as well. For me to be able to wholeheartedly back a client, I need to make sure that I believe it's something they can do too. Yeah, there's a bit involved in an acquisition when it comes to presenting it to the bank, telling the story, finding the risks, mitigating the risks up front. The formal name of that is called a credit memorandum. And we write up a credit memorandum. The start of it's called background. I usually label it background, and I talk probably I would say at least half a page, if not a page, just about the client. And then I move into financial metrics, and then I move into risks, actually pointing them out, and then mitigants. Gives you a bit of an idea about what I'm putting forward to the bank.
Yeah, I love that. I actually was in your office when you were going through that franchise agreement.